Hello and welcome to the latest episode of Millennial Money. Now, we're going to continue the theme of getting on the property ladder. So last week we talked about the home equity loan, and this week we're going to talk about shared ownership and how that works. So first up, Lauren is going to talk about eligibility, then I'll dig into some of the details of how the scheme works, and then we're going to finish on the pros and cons.
Yeah, so to be eligible for the shared ownership scheme, which is also known as share to buy, you have to be at least 18 years old. You can either be a first-time buyer, never have owned a property before, or you could have owned a property before but do not own one now and are struggling to get back on the property ladder, or you can continue to be on the shared ownership scheme.
So how the scheme works in simple terms is you can buy up to 75% of a property, so it'll be in between 25 and 75%, and the rest of the house you don't actually own, you basically rent. So overall the cost of that mortgage and that renting is usually lower than if you just bought the house outright. Now, it is only open to people who have earnings less than £80,000 or £90,000 if you are in London. And once you get on the scheme, you can start to do something called staircasing, whereby you buy increasing amounts of the property so you can own more of it going forwards. Ultimately, everybody will want to own the whole property. That's the aim of the scheme. One thing to remember, that when you do that staircasing, that the value that you buy at is based upon the current property value, not the original value of the property when you first started the scheme. Now, when it comes to selling the house, if you only still own part of it, then the housing association have first refusal on the sale. So it's a little bit more complicated than when you sell a house that you own outright. Now, one thing to remember, like most of these schemes, it's really based on new builds, so you'll be buying a new house, but there are some resales that are included in the scheme itself. Now, there are other schemes in the rest of the UK that are slightly different to the version in England. So if you want to know what they are, then you're going to have a look at those on the Money Advice Service or similar sites.
So what are the pros and cons of the shared ownership scheme?
So pros, it means you can get on the property ladder, and it means you don't have to have as big a deposit as you would do if you tried to buy the house outright. So they are the biggest pros. And also the monthly cost overall for owning, and for the part you own and the rent you pay as well, can be cheaper than if you just bought the house outright.
Okay, so what about the cons?
So one of the biggest cons about the scheme is that it's based on leasehold. So leasehold properties are those where you actually don't own the land that the property is built on. So imagine a house, you might live in the house, but you don't own the land. And so therefore there will be charges, normally service charges or ground rent, that will be applicable going forwards. And we've seen scandals in the press and lots of stuff about people being stuck in leasehold properties where the service charges are escalating at a rate that they can't afford to pay. Some of the property developers will allow you to go on to what's called freehold, where you actually own the house and the land. Now, of course, the one downside of buying a property is stamp duty. You can't avoid that part of owning a home, but with shared ownership, there is the possibility of delaying the stamp duty that you have to pay, and you don't have to pay the stamp duty based on the entire value of the property. When I'm saying the entire value, I mean the bit that you're actually buying and the bit you're renting. So make sure you know the rules surrounding the stamp duty that you are due to pay.
Okay, so that's it for this week. Thanks so much for watching. And just remember as well, if you are a second-time buyer or know anyone who is a second-time buyer, let them know about these government-funded schemes so that they can have help to get back on the property ladder or to go further on the property ladder, like we talked about in our video last week. As ever, subscribe to our YouTube channel, follow us on our social media accounts, our Instagram, Money to the Masses, our Facebook, Money to the Masses, and our Twitter, @Money to the Masses with the number 2. Thanks so much for watching, and see you next week.